Good afternoon, ladies and gentlemen, and assalamu alaikum, and welcome, and thank you for joining this regional investment outlook on building the pan-Baltic capital market, which brings together the views from the three Baltic countries, namely Estonia, Latvia, and Lithuania. And I know this topic may sound a bit exotic, given that the annual meeting of the EBRD is being hosted by beautiful Samarkand in Central Asia. But I'm sure and I promise that this will be a very interesting session with lots of lessons learned and hints for companies that want to access the capital markets and for countries in this region that have the challenge to integrate more their capital markets. My name is Elisabetta Falcetti. I'm the EBRD Regional Director for Poland and the Baltic States, and I will be moderating this session today, which is also being streamed live on ebrd.com and YouTube. So stay tuned, because I'm sure that we will have a very interesting discussion. And let me introduce the speakers here. So starting from my left, so we have Tomas Kairys, who is the EBRD head for the Baltic states. Tomas joined the bank in 2006 as a lawyer, working in the EBRD Office of General Counsel in London and working on many transactions, especially in the capital markets in the Baltic states. And he brings a lot of international experience because he established the legal practice in our office in Istanbul 6 years ago, and also had an experience of leading and being the General Counsel for Operation at the Asian Infrastructure Investment Bank in Beijing. So welcome, Tomas. Next to Tomas, I would like to welcome the Vice Minister of Finance of the Republic of Lithuania, Mr. Mindaugas Liutvinskas, who is responsible for the areas of fiscal policy, European Union, and international relations. He previously worked at the Bank of Lithuania as a senior economist and head of the Economic Policy Analysis Division in the International Relations Department. He's a graduate of Vilnius University International Relations and Political Science Institute, and also a master's degree in International Political Economy from the London School of Economics. Thank you for joining us. Next to him is Andres Kuningas, head of the EU and International Affairs Department at the Ministry of Finance of the Republic of Estonia. He also works in the Estonian Permanent Representation to the European Union, responsible for financial and budgetary matters, and is also a member of the Board of Directors of the European Investment Bank. He studied public administration at Tallinn Technical University and holds a master's degree in economics from Southern Denmark University. Thank you for joining. And now moving on to the private sector representative on this panel. I'm pleased to introduce Robert Idelsons, who is the CEO of Signet Bank, and he has been the CEO since 2013. And he has more than 25 years of experience in investment and corporate banking in the region and asset management. He began his career at the Riga Stock Exchange and held a number of senior management positions in banks and asset management companies in Latvia, including being the CEO of Citadel Asset Management. And last but not least, we have Janis Kulikovskis, who is the founder and board member of a family agro trading company, LJ Linen, which has extensive experience in trade of agricultural products across 4 continents, from Africa to South Asia. He has a degree in law from the University of Latvia and an executive MBA from the Stockholm School of Economics in Riga. So thank you all for joining this panel, for traveling all the way to Samarkand and being with us. Before we start discussing and debating the topic of this session, a few housekeeping points. because we want this session to be interactive and give you an opportunity to ask questions. So for the people who are joining us live, you have an opportunity to ask questions to the panelists by logging on to slido.com and typing in the code of this session, which is 4276885. And by looking at today's session, you should select, of course, building the pan-Baltic capital market, and you will have an opportunity to type your question there. For the people in the audience, the easy thing would be to raise your hand or to use and scan the code that you find in front of your chair on a sticker and access Slido this way. So turning on to the session, we want to kick off the discussion by sharing with you some very exciting news that come from NASDAQ in the Baltic countries. And I'm pleased to say that Karel Oates, who is the chairman of the board of NASDAQ Tallinn, has recorded for us a special greeting that we would like to watch together.
Hello, Samarkand. Greetings from Estonia. I'm Karel Oates from NASDAQ Tallinn, and our 12 points goes to EBRD, Jim, Razvan, and everybody else who have been really instrumental in helping us develop the Baltic capital markets. By investing in all our major IPOs and many other projects. Thank you for that. One of these other projects is something that started already 5 years ago, an initiative to create a single index classification for the Baltic countries, involving, besides EBRD and us, 3 ministries of finance from Estonia, Latvia, Lithuania, and the European Commission. And we have now reached an important milestone. By the end of this year, probably Q3, MSCI, after changing its index methodology, will create MSCI pan-Baltic index. The regional consolidation of Estonia, Latvia, and Lithuania will result in a larger MSCI Baltic index, and it will represent more companies. It will support a common regional capital market by combining our 3 countries, and by that helping to overcome the constraints we would face otherwise due to our individual sizes. This is all great, obviously, and a step definitely towards the right direction. But the index will still be part of the frontier market family, which I don't think our countries really are part of. So I urge you to continue our successful work, to continue to bring more companies to the Baltic exchanges, including state-owned enterprises, which have been success stories so far. And keep one goal in mind: to upgrade the Baltic countries' index classification to a developed market index. The momentum is good. Let's do it. Thank you, and have a good event.
Well, I think we couldn't start with a better news for the region. I think this is a very important step in the right direction, and something that we have been working together with NASDAQ and with the authorities, because it will help put the Baltic states on the horizon and a map of the international investors that track the MSCI index. And we heard, of course, from Karel what is the next level of ambition of the region, but I'm sure that we will have an opportunity to touch upon this during the debate. So I think it's a good moment to pass on the floor to Tomas, who can explain and present what has been the EBRD engagement in the region to support the creation of the pan-Baltic capital markets through a combination of what EBRD does at its best, which is policy engagement together with investments. So, Tomas, the floor is yours.
Thank you, Elisabetta, very much. Good afternoon, ladies and gentlemen. Very happy to be here, very happy to participate in this panel. And now we'll try to talk about EBRD and how we prioritize capital market developments in the Baltic states through, as Elisabetta said, policy initiatives, and then, importantly, through specific capital market projects. Before we do that, let me start, however, with a quick catch-up as to EBRD's current presence in the three Baltic states. As you can see, in terms of investment volume, in fact, we had a record year last year in 2022 with more than 358 million investments in the three Baltic states. In each of the countries, we have more than 100 projects. In Estonia and Latvia each, almost 1 billion investments, and Lithuania slightly ahead with 1.4 billion investments sector-wise. As you can see on the slide, the distribution is relatively even across different sectors. But coming back to the theme of our presentation, EBRD has actually had investment in each and every sector through capital market projects there. So now turning to capital markets, and there's lots to say, so I thought I will start with a rather complicated slide. I'm not going to go into detail, but the point of this slide is to actually say that, as you can imagine, the development of pan-Baltic capital markets has been a process. It's still a process, and it's a process that is taking place in a certain context, and the context is that the capital markets of the Baltic states remain relatively shallow compared to the other EU peers and suffer from smaller size of underlying economies and comparatively low liquidity. So making a pool bigger was quite a natural way forward. Now, maybe where did it all start? It started in 2017 with an MOU, and we've been very lucky in the Baltic states because I think the key point is that there was a meeting of minds as to the direction of travel. And by meeting of minds, I mean that we had an understanding from the authorities, all the ministries of finance of the three Baltic states got together, European Commission, NASDAQ Baltic, as well as EBRD. We signed a memorandum of understanding which affirmed the ambition to harmonize capital markets, to basically remove investment barriers, and this was all in line with the EU Capital Market Union's idea. Now, what is also interesting from EBRD's perspective is that we had a strategy, obviously, and the strategy has also been aligned. The EBRD priority in the Baltics is broadening access to finance, which is mainly done through deepening and diversification of the debt and equity capital markets. And the creation of pan-Baltic capital regional market is at the core of the strategy. So what is also interesting and what we've been lucky at EBRD is that we not only do the projects, we actually have a very specialized strategic unit called Capital Markets and Financial Sector Development Unit, which actually leads that policy engagement. But most importantly, we don't only do policy engagement, we actually are there to do the projects. We are, so to say, we're putting money where our mouth is, if you allow me for that sort of description. Now that we see the context, the process, what exactly has the bank done in terms of policy engagement, advice, and in terms of specific financing transactions? So on transactions, actually in the last 5 years, 2017-2022 period, capital market transactions actually scored very highly in all the three jurisdictions. Actually, on average, 60% of all the deals done in the Baltics by the bank are in the capital market space, and around 80% of those deals are actually in the debt space. On policy, there are a number of things that have actually helped that development. So first, there was a strong support from the authorities, European Commission, as well as market participants. Second, the stock exchange is the same. So the post-trade infrastructure is also the same, and it's also active. Same institutions are active in all the 3 states. And finally, there was an availability of the EC, European Union, support. So on policy, EBRD has done more than 20 engagement projects across all the 3 Baltic states. Some are specific and unique to one of the countries, but quite a few have the regional element to it. So what were these policy developments that the bank has actually undertaken in the Baltic states? First, we were keen to promote regional solutions for debt capital markets via products, such as pan-Baltic covered bonds and green covered bonds. Interestingly, Latvia was the first state to actually pass a covered bond law in 2011, but as of 2022, now all 3 Baltic states have a covered bonds laws, and all with a pan-Baltic element built in. We also support new products, including municipal bonds, real estate investment trusts, as well as short-term financial instruments such as commercial paper. We develop solutions in line with the EU priorities to promote the digital and green agenda. So following on from the completed Lithuanian sustainable finance taxonomy funded by the EC, aim now is to develop sustainable finance roadmaps for both other countries, Latvia and Estonia. Latvia is currently very keen on targeting reform of state-owned enterprises by endorsing a methodology for optimizing capital and governance structures for SOEs, and the goal is to bring Latvian SOEs to standards both in terms of disclosure and transparency so that they can access the capital markets. Last but not the least, we enhance access to finance for SMEs via regional pan-Baltic Capital Markets Development Accelerator Fund. And we also are very keen to support startups, and we try to cover part of their initial costs to help to prepare SMEs for IPOs, bond issuances, or secondary public offerings. Finally, as Karel from Nasdaq has already mentioned, one of the key elements was the idea of building pan-Baltic Capital Markets Index, and by the investment groups such as FTSE Russell and MSCI. So we've already covered that, thanks to Nasdaq, but let me reiterate. The regional consolidation creates a larger and a single index with more constituents. What is important here is that the supply remains critical. And here we need to continue to incentivize and encourage new companies, including SOEs, to open their capital structures and to tap capital markets, so that in turn we can move on to the developed markets index. And now the reclassification of such index from frontier to developed market could potentially have huge effect, I think, in attracting both institutional investments and more foreign investors to the Baltic states. Now that we've covered the policy, let me turn quickly to give you a taste of what we have done in terms of capital market transactions in the Baltic states. I will not manage to cover all of them, but I will try to give the key engagements that we had. And the first one was Estonian Port of Tallinn. It was an Estonian state-owned company which actually was listed in June 2018. It was a partial privatization. 33% of shares have been listed, while the Estonian government remains the majority shareholder. Around 150 million euro was raised through the IPO. EBRD took a 3.6% stake in the company. It was quite significantly oversubscribed, so we had to downscale our participation. And since then, this particular IPO has been used as a true success story and a model to follow by the other regional peers. So Enefit Green is another Estonian company, energy renewable company, which was the first share listing of a pure play energy company in the Baltic states. Again, partial privatization of 22.7%, euro 175 million raised through an IPO, again 2.5 times oversubscribed, and the effect of it, of course, was the push for the green equity labeling, and of course it has significantly increased Estonia's total market capitalization. Now, we talked about the equity transactions. These were the examples, but the bank has obviously worked on increasing firms' access to debt capital markets. Here we have examples of Latvia and Lithuania in Latvia, which is the state-owned energy provider, which was the first one to issue green bonds from the whole Central European and Baltic region. Then it was followed on by AST. AST was a Latvia's transmission system operator with a 100 million green bond. Also, interestingly, a different type of product, SLB, Lithuanian state-owned energy transmission system and exchange group. EBRD, we have invested 22 million euro, and it was a first sustainability-linked bond issued in the Baltic states. So as you can see, we've been present and active in all the key debt issuances in the market. Now, in terms of expanding product range, I would like to mention commercial paper, which is a short-term tradable instrument, which was initially designed to address the impacts of COVID pandemic. In first quarter of 2020, when the first wave of pandemic occurred, lockdowns obviously were the new norm, and most market participants were anticipating a liquidity crisis in the financial markets. Banking system was contracted, and working capital for local firms was quite constrained. So that's when Estonia's central bank governor approached us and said, could we explore some potential solutions and tools to address this impact of COVID? A year later, since our first discussions with the Estonian, Lithuanian largest retail operator Maxima has actually successfully placed a commercial paper. The key features, 1-year tenor, registered with NASDAQ, and a very good pricing for a period of 12 months. So the key highlight is that the bank subscribed around 11%, and there was also a quite significant IFI allocation, which I assume our colleagues from the Nordic Investment Bank have also stepped in to support this innovative instrument. Finally, I could not finish without mentioning green products and initiatives, which are very much supported across all the 3 Baltic states, and this alignment helps the development of the market. Here, Lithuania is used as an example as a development of a greener jurisdiction. As you can see, EBRD participated both public and private sector capital issuances. So Ignitis is the largest state-owned energy group in Lithuania. And actually, in fact, this was the very first bank's investment in a green bond altogether, which was issued by Ignitis, which was then followed on by an IPO, raising euro 450 million and raising 27% of shares through the capital market. Again, partial privatization, and since that is the largest IPO from the Baltic states. Auga Group was an interesting example of a private sector company, agribusiness company, which is an organic producer, which tapped capital markets through a secondary public offering that was quite novel at the time in the Baltic states, and EBRD has played a key anchor role there. So there's also the policy element to it, which I've covered already in the past, and we are engaged quite successfully with the Ministry of Finance of Lithuania as well as European Commission. And I just wanted to say that I've talked a lot about the companies at different sectors, but I have not forgotten to mention the financial institutions and banks. And this is actually, these are actually the players in the Baltic capital markets, which in terms of issuances played a key role. And examples are Luminor, regional Baltic bank, issued covered bonds, and a number of senior preferred bond issuances through by Estonian LHV Bank, Lithuanian Šiaulių Bankas, as well as the pan-Baltic Luminor Bank. Now, my final slide, of course, is just to congratulate our Lithuanian, Latvian, and Estonian colleagues on this truly cross-country, cross-institutional, cross-public and private sector engagement, and it's truly rewarding to see tangible, practical outcomes, such as the pan-Baltic Index. So thank you very much, and we're looking forward to the EBRD to further collaborate in building the pan-Baltic capital market.
Well, thank you, Tomas. I think this was a great presentation that shows how deep our engagement has been and how strong our collaboration with the authorities is. And I see in the audience some of the drivers of our policy engagement. So thank you, Andre, for attending, because the capital market team that he established at the EBRD has been instrumental in driving this reform agenda. And thank you, Razvan and Jim, if you're following us online, because you have taken on the baton of this. Now, talking about the role of the authorities in supporting the creation of the markets, let me ask the Vice Minister Liutvinskas about what have been the key measures that you have taken in order to support the creation of the pan-Baltic capital market. And looking forward, what are the next steps and challenges?
Thank you so much, Elisabetta, and thanks, Tomas, for a very comprehensive overview. It makes my job easier in making my slides a bit shorter, maybe. First of all, pleasure to be here, part of this panel, being able to represent the perspective of the Lithuanian government. I will try to structure my remarks on three levels: EU, regional, and the national. And I will try to, as you, Elisabetta, said, try to maybe think of what's next, what could be in the pipeline going forward, because that's important. We have done a lot, but where are we going? What's the direction of travel? And I guess, on the outset, I can say that at the regional level, we do have good cooperation. It's evident from the steps and the examples that have been said, and EBRD is playing a key role here in facilitating all this. So we're glad to have you. I guess we're cooperating well, partly because we're just good neighbors, very constructive as always the Baltics are, but partly because pragmatically it makes sense. We're all small markets, and creating a bigger market, even though, well, not that big on a European or global scale, it does make sense from the economic and market perspective, right? So having said this, let me try, the slides are moving, that's good. Just one slide on where we are at the European level. I'm sure I don't need to preach to this audience the importance of capital markets and what the benefits they bring. I will maybe just say that just this Monday, and I'm coming here straight from Brussels, we had Eurogroup debates on where is the direction of travel at the European level. We had like this extensive action plan by the Commission with many incremental steps to deepen the capital market. Some steps have been already implemented, some are on the table. The question is, so what will we do in the next institutional cycle? What should be the mandate or the interest from the ministers of the Eurozone towards the new Commission? What should be the new KPI? So the idea is basically that CMU is going to be firmly on the European agenda going forward. It's not going to go away, which is a good thing. The drawback to that, I guess, it's a very slow-moving process, as many of the European processes are. But in the immediate pipeline, I can say that we have a few important steps still in this institutional cycle. One of them is, I'm sure many of you know, the Listing Act, the listing package, important for SME access to finance, to the markets. It's indeed a much welcome step. We've been advocating for measures like this for a while. Then the Corporate Insolvency Directive in terms of streamlining and harmonizing some of the elements for insolvency procedures, which is a key bottleneck when it comes to smaller markets. Maybe even coming up with a bespoke ad hoc regime for SMEs insolvency procedures, which is also an important element. Then retail investment strategy. I guess in all the Baltics, the situation is similar, that over the last few years, we've seen an increase in deposits of households in the banks. They're just deposits. They're not being employed as investments, and some incentives and some regulations to help to move these funds would indeed be good. So, at the European level, lots of things going on. The issue is it's a bit slow, and then that's part of the reason why back in the day, in the Baltics and also domestically, policymakers naturally started considering maybe we can do something which would supplement the European effort in a bit quicker manner. And this is, I guess, something that we have been doing with the help of the EBRD, the Commission, and other actors, also including from the market itself. Now, going to the regional perspective, the pan-Baltic market, I would like to say that, as I mentioned, we really see the regional Baltic capital market as a building block for the broader CMU, not as something that contradicts it, but as something that supplements it. Because the true CMU, a true European capital market, will definitely be created, won't be created overnight. We see that. It will take time, so we need to take a step-by-step approach, and I guess we in the Baltics have good experience and good examples of that this could be done. Now, a lot of things have been said, so I will just probably mention that we have in place the unified regulatory framework at this point for covered bonds. I'm happy that the Lithuanian Parliament adopted the law last year after lots of negotiations and policy work. Then in the pipeline, we have the Capital Markets Development Accelerator Fund, as Tomas also mentioned, focusing on pre-IPO, IPO stage, also with focus on SMEs. We believe that when we sort out the financing details, it will be an important vehicle, an important instrument to also increase the access of SMEs to the market. And if we manage to do that, I guess this could be a game changer for the Baltic markets, because the SMEs, the backbone of the economy at the EU level, but especially so in the Baltics. We're small markets, don't have that many big listed corporates. We have a few, but the backbone of the economy is SMEs, and if we move this piece, I think that could be a key to really unlocking a deeper capital market in the Baltics, also, and in Lithuania in particular, talking from my perspective. The regional treatment in indexes, indeed a good news that came in on the MSCI index. Of course, it's a good step now to have a Baltic index, but being a frontier, I don't really like it too. I agree with with those who flagged this. We need to work further to at least jump into the emerging market category on this. But maybe that's a thing to come in the future, and a good aim for us collectively, I guess, to work in that direction. And talking about further also areas of work, I guess we can always discuss, and we are discussing among the policymakers, the possibility to further harmonize some regulatory requirements in certain segments of the market. Well, from top of my head, pensions, pension funds, institutional investors, a big player in the market, somehow still not unlocking the potential there is in the market, especially given that the players operating in the Baltics, they're often other European players or especially Nordic players. So we can kind of even extend the discussion on the Baltic capital market, adding the Nordic Baltic, which would then make it, a different league, so to say. So it could be a direction of travel, and maybe members of the panel, could have thoughts on that too today. And the other track is, something that features prominently in every government's agenda now and features prominently at the European level. That's sustainable finance or green transition financing. We have a plan prepared domestically, also with the help of the EBRD. I will talk about it in a minute, but I guess this is something that we as the Free Baltics could actually try to look into and try to find synergies, how we can use the available limited resources for the massive needs of the green transition, mobilize the private funds, and do it at the regional level, not just at the national level, because the energy markets are interconnected, the transport systems are interconnected, so it makes perfect sense to also have this regional approach here. And I have a few slides. It doesn't show the beautiful kind of heading of the slide, but it's supposed to say that change starts at home. And I wanted to spend a bit of time talking about national initiatives that we have in Lithuania, which then supplement the European and the Baltic level. So just recently, last year, with the help of the Bank of Lithuania, that has done a good job in analyzing the state of the capital markets. Today in Lithuania, we have prepared and adopted a capital market development plan or guidelines, whatever you want to call it, and it has. It kind of gives you a sense of where we're going domestically with the capital markets. And an important thing it does, it establishes what's called the Capital Market Council, which is basically a platform for continued dialogue between institutions on one side, different ministries, also the Bank of Lithuania, the regulator, and market practitioners. So we have a body where people talk on a regular basis of what needs to be done. And then it's also the kind of monitoring platform for the implementation of the guidelines. Because one of the bottlenecks that we saw looking at the previous perspective is that we didn't have one owner of the capital markets agenda. And then when it falls in between, somewhere between the Ministry of Finance, Ministry of Economy, another ministry, the Bank of Lithuania, it's a bit tricky because different policymakers, different teams, it takes more time. So having this body, we feel it could make things a bit different. It could have an impact on getting things moving. And not going into details, I will just mention maybe a few points on what's in the plan. So one of the elements is, of course, the council setting up of that. Then it has a tax element, and a key proposal here, it's already been out of the government, and we hope it will reach the parliament soon, is the kind of investment account for retail investments. I know that some countries in the region, in the Nordic Baltic region, have it. So we take the good practices that we see, and we put it on the table, and we hope that it will be also an important change in allowing to mobilize a bit retail investments. And moving part of that massive amount of deposits in the bank accounts sitting there not being invested. So that's on the tax side. Then on the regulatory side, there are also thoughts and ideas. Maybe I will also mention the pension fund sector, the institutional investors looking at potential tweaks to regulation of this market segment, potentially of where these pension funds can invest, what sort of risks can they take, maybe extending the eligible asset base, and stuff like that. So that's an important track. And then it's the third, I'd wanted to mention, the third track is basically financial instruments. So we have financial instruments which would then facilitate the access of SMEs to the market, basically. That would be the fair way to put it, I guess. So the accelerator was already mentioned by me and Tomas. We hope that we can get it running at the Baltic level soon. It's an important thing for IPO, pre-IPO companies willing to be listed. And then the other thing is we have also at the domestic National Promotional Agency an instrument which helps SMEs willing to be listed to cover part of their just listing costs and giving a bit of advice, because usually it's the first time the companies do it. It's not an easy process. So we have a few elements on this in the plan too. And then jumping to my last slide, a bit of a broader perspective at the national level. So where does this plan fit? The capital market guidelines, among other priorities related to the capital markets and development overall in the financial system in Lithuania. So I'll maybe start with the public finance education plan. It's still in the works a bit, but the whole idea behind it is to create a coherent system, partly touching on the education system, to help the society in general, especially the youth, to understand better what are the financial instruments available, to help them maybe prepare for different stages of their lives, the retirement, other bigger elements, maybe where they need some savings, how to employ them the best. So that's one side of it. And the other side, a very important one, is SMEs. Because it's not only about the financial literacy of people, it's about the entities. And we see from many surveys that we have made is that for SMEs, it's a bit difficult to figure out that there is an alternative to bank funding. And they usually just go to one bank, they get a no, and that's it. So they don't even bother going to different banks, not to mention going to the capital markets. That's difficult. So we try to, with this plan, when it's done, we try to help them to really understand the options that are there. And knowledge is important for, kind of, if there is an opportunity, an alternative, maybe if the numbers are right, the companies will take it. Then, of course, we have our beloved fintech topic. It's, I guess, a success story for Lithuania over the last few years, managing to transform itself into a regional fintech hub. And I think it's a good example of how the public sector can make the initial push in trying to establish a working ecosystem, and then giving kind of the incentive more into the hands of the market players. So there's a new guidelines for 5 years that's been prepared in consultation with market players, and a key element of it is basically in connection to capital markets that we try to diversify the ecosystem a bit. So now it's mostly payment institutions, the kind of traditional side of fintech as we understand it, but what we try to do is maybe focus more on additional players coming in, establishing in Lithuania, which would, for instance, deal with wealth tech solutions. And it's also a connection with the capital markets, then facilitating investments of retail investors, also some companies in some instances. And the final point, the Green Finance Action Plan, it was also alluded to a bit by Tomas. It's a big thing that we have been preparing for a while, also with the help of the EBRD and the Commission too. So it's been prepared, negotiated, and now it's time to implement it. Not going once again into the details and saving your time, it's basically, it's publicly available, you can access it. Basically steps how to create a working ecosystem in Lithuania and potentially a broad region that would allow to channel and mobilize private funds to channel them into the green transition needs. We have estimated that by the end of this decade, we need around 14 billion for the green transition. Around 10 billion of that will come from the public sector, national EU funds. Around 4 billion of that we still need to mobilize, ideally from the private sector. That's the starting point why we decided to have this plan, and it kind of creates a lot of incentives for the private capital to go and fund the green, so to say, assets or projects. The core element of it is, I guess, a publicly available database, which would contain granular information on companies, households in some instances, and that would allow market players to really understand what is green, what's not. And then another key leg of the plan, and I stop here, is establishing a Green Finance Institute, which would be basically owner of the green finance agenda domestically, and which would function as a de facto kind of think tank on the public sector side, consulting both entities and private market players on how the ecosystem works, how to manage the whole green requirements, the taxonomy, and many of the regulations we have at the European level, and overall, bottom line, helping the green projects, green assets, meet the funding and the liquidity that's in the system, in the banking system, in the different funds, different institutional investors. Yeah, so I'll probably stop here. I could talk a lot more, a lot of ground to cover, but I'm trying to save some time for other speakers too. So thanks.
Well, thank you very much. This was a very comprehensive presentation, and I see lots of new initiatives that align in a way also with our priorities, because of course green finance is at the core of what we do in the region. Now, moving on, Andres, can you bring your perspective from the Estonian authorities on this topic?
Thank you, Elisabetta, and good afternoon, ladies and gentlemen.
I don't think is your microphone working? Speak up.
Thank you.
Can you hear?
Testing, testing.
Yep.
Now it works? Yes.
Yes.
Okay, the right words. Anyway, thank you, Elisabetta, for the introduction, and Tomas for very good summary of what EBRD is doing in the region. And indeed, I mean, our kind of final goals should be the capital markets union, the seamless movement of capital in Europe, and so we shouldn't actually stop with the pan-Baltic capital markets. But as Mindaugas also very correctly pointed out, that capital markets unions could still be quite a bit time away from us, and the Baltic capital markets is more attainable objective. And what do we need? I mean, we need a good market infrastructure. We need supporting legal framework. But we also need the investment targets and investors, and of course then the products which will bring them together. And I think in that sense also EBRD's activities have been very much targeted on these different aspects, and have been also part of Estonia's country strategy for consecutive strategies, and especially, I mean, we have started with the diagnostics. We have had support for legislation to cover bonds, and EBRD has been active investor as well, with the IPOs already mentioned, Port of Tallinn and Enefit Green, and also the covered bonds initiative as well. From government side, of course, there are, I mean, this has been all done with very much in cooperation with the government, and also the new government, which has been in office just for 1 month. They have very many priorities, ideas, how to improve, among others, also the functioning of the capital markets in our region, of course, in the first place in Estonia. There are plans to see ways how to still improve the business environment, make the establishing and all related issues more easier. The privatization plan is to continue. The government plans to have a review of the possibilities by the end of this year, which will possibly open up for another round of public offerings. Third, maybe larger issue which is in the plans is related to the pension system. There is still ideas maybe how to make the second and third pillar more flexible, but another issue is what also Mindaugas mentioned is how to actually make use of the pension funds assets and make them invest into our economies. So could be a good point of time to actually exchange our views and have them be kind of mutually supportive. There are also plans to reinforce our promotional agency and also having in mind both the SMEs, green economy investments, which could also lead to the new products and possibilities to expand. And as maybe a last point, also very important is financial literacy, which has been a very important program already for some years. It has also been emphasized the importance by the time we had our pension reform, that people need to know how to actually manage their finances. And yes, and just to conclude, also very big thanks to Andre. Elisabetta beat me to it. I mean, you have been really the initiator of the whole program in the Baltics. Thank you.
Thank you, Andres. I think I can see that there are some common themes that are emerging, and this topic of financial literacy is one where I think is still a big challenge even in advanced economies like the Baltics. Now, moving on to maybe getting the private sector perspective, I would like to bring in Robert, because, I mean, Signet Bank under your leadership has become one of the leading investment banks in the region. You've been helping small and medium companies access the capital markets. So I would like to ask you what have been the key initiatives that have been taken to allow this to happen, and also what are the key challenges ahead? So what is the remaining agenda from your point of view as an arranger and investment banker?
Yes, thank you, Elisabetta. Hello, everybody. It's a great pleasure to be here, and I hope to give a bit of a practical perspective on what's going on in capital markets, predominantly in Latvia, but also I have some data about the pan-Baltic capital markets. I agree that the themes are very much similar, and actually I'm very happy to hear that some of the initiatives which our colleagues in Estonia and Lithuania are considering to happen have already happened in Latvia, and I will talk about it a bit later. So I think we are in synchronized way, all the Baltic countries are moving ahead and forcing ahead with making capital available to not only large companies, but also small and medium-sized companies in the Baltic countries. So just a little bit of data about the Baltic capital markets and its trends. We can see that in terms of, basically it's data about the equity markets and corporate bond markets. In terms of corporate bond markets, we see that the volumes maybe have been more or less stable since 2021. But at the same time, we see that the number of issues which were placed and listed on the stock exchange has grown quite substantially. And I think that's one of the evidences that especially medium-sized companies have access to capital through capital markets in the Baltics. And I think that from our Latvian perspective, the more challenging task right now is not to, is actually make companies, entrepreneurs and management of these medium-sized companies to understand that there is a possibility to access capital market. So that's why we are talking about financial literacy exactly among the entrepreneurs and the managers of medium-sized companies, in addition to financial literacy of the retail investors. And from the equity market perspective, the volumes have been fairly stable also from 2021. In terms of new issuances, there have been almost every year there have been a number of large issues which were placed by large regional players, predominantly in financial sector. And big thanks go to EBRD to support these placements and that way support development of the capital markets in the region. And in terms of number of placements, we see that in Lithuania and Latvia, there are a growing number of companies which obtain financing through debt placement and through IPO on the local exchanges. Now a bit of data about the Latvian bond market. In the Latvian bond market, we've seen quite a number of evidences when medium-sized companies and even small-sized companies have been able to fill the gap in financing needs, which was not possible with the traditional banking financing. So I can say that for local companies, bond issuance has become a viable alternative to traditional bank lending, and there have been actually, in terms of industries and in terms of reasons why the companies have accessed capital markets through bond placements, there have been quite a big diversity. And the needs are different, but basically most of these cases are situations when a company is not able to get a traditional loan from the bank to fulfill its ambitions. So basically it's not that the company is not able to be banked, but companies which have large investment programs, companies which have large M&A ambitions, international expansion ambitions. So these are the typical situations when companies would go to capital markets route and would access financing through bond placements. And also, if you can see that in terms of size, there have been also companies with fairly small amount of bonds being issued, which basically manifests that the administrative work and administrative expenses related to accessing financing through capital markets are not excessive. It's possible to tap the capital markets also with a couple of millions of euros of a bond placements. So we are really happy of the developments which are going on in Latvia. And now a few words about why we see that these developments, these positive developments are taking place. I would like to note this 10-step program, which was developed by, now it's a Bank of Latvia, but at the time it was a Financial and Capital Market Commission. So in COVID times in 2021, they came out with a 10-step program, which basically kicked the ball and started a number of other initiatives which resulted in successful realization of ideas. One of these ideas was Security Sandbox, which was launched by Bank of Latvia. So in this sandbox, every company operating in Latvia is able to completely free of charge to get an advice whether they are eligible, whether it's possible for them to access financing through capital markets, and if not, then what needs to be done to access this financing, what homework company needs to do it. Another initiative was a grant program for SMEs, for local SMEs, which basically covers 50% of the administrative expenses related to listing bonds on the local stock exchanges or listing equity on the local stock exchanges. I think the great achievement was improving of legislation, of tax legislation, because Latvia is a country where we have this investment account, which means that any investor who is investing through investment account locally or internationally is not required to pay a personal income tax until the money is withdrawn from this account. So, and I think this is a big driver why a growing number of Latvian residents are actually opening investment accounts and investing in capital markets. And there have been another number of other initiatives which maybe I will not stop on in very much details right now. What we need, I think there are a number of things which we still can improve. Obviously, the elephant in the room when we are talking about the Latvian capital markets is lack of local large companies listed on the local stock exchange. There has been a great push done by our Prime Minister and Minister of Finance in recent months to actually change the situation, and I really hope that this year we're going to have at least a decision to list at least one of the state of or municipally owned companies on the stock exchange, which would also benefit the MSCI index. We will have hopefully one company from Latvia also entering this index, and this will also give a great boost to development of the Latvian capital market, I'm sure about it. And another topic I think which is also common for all the Baltic countries is involvement of the second pillar pension plans in the local markets. Local markets are small compared to the size of the assets which are gathered in second pillar pension plans in the Baltic countries, and that is one of the reasons why these assets are not really invested in the local economy, but predominantly invested internationally. So there have been a number of ideas how to make sure that these assets are actually playing a role in development of local capital market. One of these ideas is pre-IPO fund, or a separate fund which would be partially invested by local second pillar pension plans. So I think this is one of the avenues which could be beneficial for everybody, also for second pillar pension plan managers. So I think that involvement of second pillar pension plans is crucial for continued growth of volumes on the local markets, because right now the investors in the local market are mostly local retail and high net worth individuals, very little institutional money. So this is one of the tasks that I think everybody needs to work on to make sure that happens at one time. And yeah, financial literacy, once again, financial literacy of the retail investors and financial literacy of the issuers, of entrepreneurs. I think that issue is of a great importance, and I think that we all need to work on improving this aspect as well. And finally, just one small slide about Signet Bank and our contribution to development of the capital markets in the Baltics. We've helped to raise more than 350 million euros, mostly through debt placements for local companies. That resulted in more than 30 issues arranged or co-led by Signet Bank, and more than 10 of these placements were listed also on the local stock exchange. So thank you for the opportunity to talk about Latvian capital markets, and yeah, give floor to. Hopefully there are going to be some questions as well.
Thank you, Robert. And I think you outlined very well the agenda going forward. And let me now pass the floor to Janis, because I think we have a unique opportunity to hear from you. So you are leading a family-owned business, B2B, agro trader, with activities in 4 continents. You also have very strong environmental credentials, contributing to the circular economy. And what is interesting from our perspective and today's debate is that you decided to access the capital markets to fund your expansion. So we would like to hear from you on why you decided to go the market route and what have been the advantages to do so.
Yeah, Elisabetta, thank you for the introduction. So first of all, I would like to say how honored and happy I am to be here today in this event and in this amazing city of Samarkand. So to tell a little bit about our journey in the capital markets, I have to tell also about what is exactly what we are doing as a company and what we do and where we operate. So first of all, we are, as mentioned earlier, we are an international trading company located in the very center of the Baltic countries in Riga. So it's a family business in the 2nd generation, and our main products are animal feed ingredients, organic fertilizers, ingredients for biofuels, and our ambition is to service the whole world, and current focus is on developing countries and emerging markets. So our portfolio consists primarily of products that are actually part of circular economy. So basically, these are products that are produced from leftovers from the production of food for humans. So after processing these leftovers, they are converted into animal feed, organic fertilizers, and biofuels. So this actually, and these products are in this way reintroduced back into the food chain. So consequently, you know, we are actually a true part of green economy, and we do have an actual impact on the climate. So secondly, we have offices in 13 countries, mostly in sub-Saharan Africa, Southeast Asia, and Europe. So we have developed a very strong and very deep understanding of these local markets that are seemingly complex. And by doing that, we are creating a network of supply chains, and we are providing an access through one channel to several countries all at once. And we are ensuring door-to-door deliveries of certain goods. We are stimulating pan-Africa trade of commodities, as well as in certain cases, we are also providing short-term financing for our clients, as well as education. So this way, as a result, we are actually improving the efficiency of food production and farming in the regions that are currently with the fastest growing populations in the world. So currently, you know, we've been very happy and lucky to position ourselves in the markets within the products that are helping us to be resilient to the current new world order. So from COVID-19 and geopolitics and consequently economic uncertainty that's following, so the supply chains have been disrupted. The focus has been set away from emerging markets, And the food in these developing countries, as a result, has become much more expensive, much harder to produce. So we've been knowing that. We are very happy and thrilled to notice that we have been in the right place in the right time all along, and we are helping to overcome this inequality, and we are actually helping to supply these regions with the products that can replace otherwise more expensive or unavailable raw materials for food production. So secondly, we've been happy and lucky enough that the current geopolitics and current world economics is actually driving the farmers as well as food producers to become more and more efficient, and they are more open to listen to new opportunities. And finally, our business model of being very lightweight, very agile, having a lack of bureaucracy and being very fast in decision making, we've been able to adapt to the current market realities. And this has allowed us to fill the void in developing markets. So, it hasn't been fun and games for us, as you can imagine. So even though we are a trading company, which seems quite traditional in its essence, we have not been seen like one by the main local banks in Latvia. The choice of our markets, the choice of the products that we trade are perhaps too extraordinary for them. And, in many cases, the products that we are trading don't even enter European Union. So that's an extra headache for commercial banks to have. And finally, even though Latvia is a fast-growing and very liberal market economy, because of some market forces, a lot of capital has been concentrating in the hands of very few, very large commercial banks in Latvia. And you can imagine having a very conservative bank with excess capital facing Euribor of 3% and giving away only 0.5% in deposit rates. So why bother issuing loans at all? So all in all, all this just says that we simply didn't have any other choice. So capital markets, thanks to Signet Bank, which is our good friend and partner, so we've been able to facilitate our growth by actually entering capital markets, and I really appreciate the work that Signet Bank has done as a pioneer to open the gates for companies like ours. So finally, however, this capital markets, to my understanding, is still in the very early stages of development in our region. So the consequences for that is that the capital for us is generally more expensive. So I'm very proud to say that even though it's more expensive, we still are able to use it in a proper way, which probably makes us much more efficient and competitive than our peers in the western part of Europe. So I would say that capital markets currently, I would see them as a youngster learning to drive a car. So he's extra careful and he's not taking any risks. So and having an extra precaution. And we, as a user of capital markets, we have to adapt to this. And nevertheless, I'm very excited to hear about all the plans that the policymakers have in hand. And, I would be very excited to see that the liquidity of the markets is increasing. And, just to give as an example, so our journey has been quite tough because we as a trading company, again, we had to prove that we had to explain so many times what is that we are actually doing. We don't have anyone to show that, hey, we are similar to this or that company. We were basically like a black swan. So this takes a lot of effort, and I'm really looking forward for the markets to expand both in terms of the bond issuers as well as the investors, and I'm really looking forward to improvements in this investor literacy. So, yeah, that's our story.
Well, thank you, Janis. I think it's fascinating to see how successful you have been in venturing outside of Latvia, but also the challenges in financing this growth. So it shows that having a diversified series of instruments and tools really allows company to grow even abroad. And of course, the fact that you work in sub-Saharan Africa is of great interest to EBRD, especially if tomorrow there will be a positive decision to consider the expansion to that region that has a great potential. Now, I think you heard from us, we've been slightly overrunning with respect to my schedule, but there is an opportunity to ask a few questions. So a reminder that if you are following online, you can log into slido.com and type the code 4276885, or use the code that is in front of your chair, or raise your hand here. I have a few questions that I see on my screen already, so unless there is somebody that wants to raise a question directly from the audience, I will pick up a few from here. I don't see eager people to intervene, so let me see, let me pick, well, maybe let's start with this question because it was touched upon, but it's a good question. So the region has a great reputation as a fintech hub. There have been, has there been thoughts on specific incentives for successful ones to list in the Baltics, or at least to consider a dual listing? Maybe it's a question for...
I can try start to answer. It's a broad question. Yeah, I think it's on.
Yeah.
So I can try start answering. It's a broad question, and maybe from a broader perspective, indeed, we as the government, we see synergies between the fintech agenda and the sustainable finance or green finance agenda on the other side. I mentioned it a bit briefly in my slides for a reason, because we think that the experience we as kind of policy makers or the public sector in general got and managed to build in driving a change with the initial driver coming from the public sector, it could be very useful when it comes to the green finance sector, because we now speak with different actors. There seem to be a lot of projects that need funding. There seem to be a lot of interest from the banks, the financial players, but somehow they don't manage to find each other. And for this, that's why I said ecosystem. We need to create it. We need to help these projects, people, money meet, and it will be then good overall for the kind of green transition, which is a strategic goal, especially in this geopolitical environment. We need to ensure that all the money we can mobilize is going in the green transition, making our economies more resilient to future shocks. So I think on a strategic level, there are definitely synergies of these agendas, and you know, there are even cases where some novel entities are trying to combine both elements, the fintech and the green element in the products they offer. And this can be, you know, we can think of wealth tech management solutions. You can think of other elements where you can use the kind of good name and the reputation that the country already has, the reputation even the region has, to use it as a leverage in terms of trying to make a change and make a leap forward with the green transition, with the green finance agenda. So I maybe stop here. It's a bit of a broad views, but I think fundamentally that's where we stand.
Thank you. I can see there is a question from the audience. Wait, because there must be somebody with a microphone coming to the front row. If you please introduce yourself.
Yeah. Good afternoon, Peter Bossek, CEO Luminor. Two questions. What could we do together to change the perception of capital markets at the moment? Because issuing from the Baltic region at the moment is super costly, since we have the Russian-Ukraine situation, or the war in Ukraine. And second question, I agree that we saw an increase in liquidity over the last 2 to 3 years, especially for bond issuance. We have no secondary market at all. And I think to develop sustainable capital markets, I think this is a kind of prerequisite. What can we do together, public and private participants, to build it up? Because otherwise we are not able to move on from my perspective?
Very good question, Robert.
Well, at least start to answer. Yeah. Yes. No, I think that in terms of making the borrowings cheaper, yes, and that's something which Janis has touched upon as well. I think that the route to go is to obviously increase the demand, because it's a question of supply and demand. And if right now the main investors in the Baltic capital markets and debt instruments are private individuals or retail, obviously their cost of their expectation of the yields is higher than institutions. So the only way we can make these borrowings cheaper is to force somehow the pension fund managers to actually invest in the local debt instruments, regardless of their size. And actually, it goes also together with your second question, because normally pension funds have so long money that they don't really actually need the secondary market. Unless there's something happening with the issuer, I mean, they're happy usually to sit until the maturity in debt instruments. And I think that's the most important issue which we need to tackle in the Baltic capital markets in terms of demand and bringing down the cost of borrowing. Yeah, so thank you.
I can just maybe add on that. So I agree that unlocking, so to say, the potential of institutional investors in the domestic markets, that's important. It's a reserve that's still not fully tapped, in my opinion. I guess we need to think of how, with what sort of regulatory incentives or changes we can manage to do that. Because, of course, we face some of the issues of the small market, lack of assets. I mean, there are many issues. It's a complex issue. There's no silver bullet to that, I guess. And on top of that, I would say financial literacy. I mean, that's also important, because now the perception of the capital markets, at least when it comes to retail investors, smaller enterprises, is that too complex, too costly, and to understand it, I'm not going to even check it. And this is part of the problem, I guess. This is part of the problem in the sense that then, you know, there is a lack of new entrants to the market, lack of interest. Meaning that at the end of the day, the markets are less liquid and less deep than they could be. So I guess it's, you know, it all goes in a circle in a sense, and I would probably keep this element of financial literacy also as more of a soft element, apart from the regulatory changes potentially, but it's important in my view.
Thank you. I realize that time is running out. I don't know whether we are allowed to slightly overrun. I'm looking around. I see sort of head nodding. So unfortunately, I do apologize, but we would have to stop here. But I would like to thank you, and I would like to have a big round of applause for our panelists today, because I think we promised on the goal to deliver an interesting session, and thank you to the audience, of course.